Hello and welcome to another Smaulgld live stream. It is Sunday evening, the 19th of May, 2019, and tonight is Solid Gold Sunday with Smaulgld. And tonight's topic is retail gold sales crater while central banks continue to add gold to reserves. Welcome, Smaulgld mug stackers and game changers. Tonight we're going to focus on gold. Sunday night is dedicated exclusively to covering topics relating to gold. Saturday night, we do Saturday night silver with Smaulgld, where we focus on silver. And Friday evenings, we do Friday night crypto with Smaulgld. But tonight, we're going to be focusing on gold. And we're going to look at the gold sales at the U.S. Mint, the Canadian Mint, the Austrian Mint, and the Perth Mint in Australia. And we're going to see a real sharp decline in retail gold sales. But retail gold sales don't really provide a full picture of overall gold sales, nor do central bank sales. But we're going to take a look at those as well. We've got a few other stories to look at tonight, including a high-profile counterfeit gold story. So let's get right at the charts. For those of you who watched last night's program and you're interested in the silver charts, they are now all up on Smaulgld.com. You can go check them out. Every chart that we talked about last night is now appearing on the site, so you can go and look at those charts at your leisure. If you're interested in buying gold or silver, you can also do so through the Smaulgld site, through the affiliate links. It's not an investment advice to buy gold or silver, nor is anything in this presentation. But if you are going to buy gold or silver, you've made your decision. You can help the site out because Smaulgld gets a small commission when you do buy from those affiliate links below this BitChute and this YouTube and over on Smaulgld.com from SD Bullion, Money Metals Exchange, and Golden Eagle Coins. All right, so let's take a look at the... let's start with the U.S. Mint, because the U.S. Mint is the big retail mint in the world, where the largest selling gold coin is minted, which is the American Silver Eagle. The American Silver Eagle is also the largest selling silver coin, but it's the American Gold Eagle that is the largest selling gold coin. All right, let's take a look now at, here we go, American Gold Eagle sales. First, let's take a look at American Gold Eagle sales from 1986 through 2018. And as you can see, they have dropped precipitously the last 2 years, 2017 and 2018. And last year, the largest selling gold coin in the world, the American Gold Eagle 1 ounce size, only sold 188,000. Now that's pretty low, but it's lower than the 228,000 that were sold in 2017. And you have to go all the way back to before the financial crisis of 2007 to get that low of a sale of, I think in 2007 it was 147,000 American Gold Eagles sold in 2007. That's the 1 ounce size. This year so far, I don't have it included in the chart because it would be somewhat misrepresentation because we don't have a full year. But so far through May, only 71,000 have been sold. 71,500 for a total of 101,000 when you add in the fractional sizes. So for purposes of this chart, if we had 188,000 1 ounce American Gold Eagles sold last year, we are at 71,500 American Gold Eagles 1 ounce size sold so far. At that rate, will probably be lower than 188. So you can see a precipitous drop off in sales. And this month so far, I think only 1,000 American Gold Eagles were sold. Now, let's look at the 1/10 ounce. That chart showed you the historic 1986 to 2018 1 ounce. I also keep track of the 1/10 ounce. and they've also dropped. They've never been a big seller. I guess because the premium is higher, you pay more for, if you buy 10 of them, you're going to pay another $150 probably more than if you just bought 1 ounce of gold in a 1 ounce size. But you can see there, 245,000 sold last year. It's not the lowest. I mean, they didn't sell that many in 2012, but you really can't use the 1/10 as a barometer for the health of gold sales. They're not high, and so far this year they've sold 135,000. So it's possible this year they might sell more 1/10 ounce Gold Eagle coins than last year, but that also could be that if people are going to buy gold, maybe they buy small amounts. People have a lot of different theories on exactly what is happening and why it is happening. Some people say gold sales are down because people don't have any money. I don't know. I think people didn't have any money after the financial crisis either. Some people say it's Bitcoin, but Bitcoin has been around now in 2017 and they sold more, and that was when the big hype was. And in 2018, last year, the whole Bitcoin craze had died down, and therefore I would suggest it wasn't competing with gold sales at all, and they were down anyway. I think it has to do with the moving away from physical gold sales in favor of gold ETFs and other online products, at least in the United States. And even in India, there's now companies that are trying to sell digital gold. So I think that might have something to do with it, because there is demand for gold globally. It just doesn't seem to be now in the form of these American Gold Eagle type coins. Now let's take a look at the American Buffalo coin. Now the American Buffalo coin was introduced in 2006, and it was meant to answer the Canadian Mint and all the other mints that had started to produce 24 karat gold coins. The US Mint produced the American Gold Eagle starting in 1986, and it was a 22 karat coin, about 91.67% gold and the rest copper and a little silver. And that somewhat reflected very close to the gold coins that used to circulate in the United States up until 1933. Back then, the gold coins were 90% gold, 10% copper for the most part. And the reason they add copper to the gold is to make them a bit more durable, because gold is pretty soft. So if you add a little copper to it, it gives the coin some substance and it doesn't fade away as easily. And that's why when they made the 1986, when they introduced the 1986 American Gold Eagle, they had it at 22 karat instead of 24 karat. And prior to the American Gold Eagle being introduced, the number one most popular selling coin in the world was the South African Krugerrand, which also was 22 karat. And people would exchange those in the 50s, 60s, and 70s. You could buy things with them. I mean, you still can, but it was an international currency, so they knew they wouldn't just be hoarded, that they might be exchanged from time to time. So they wanted to make them 22 karat. But then when investors became interested in gold, they also started talking about making them into 24 karat gold. Since they wouldn't be handled at all, they figured they can get away with making 24 karat gold. Although I understand that the 24 karat gold still can get messed up, even though people don't use them or trade them. And dealers might, when they buy them back, may not pay you full price for the 24 karat gold. They actually prefer the 22 karat American Gold Eagle and Krugerrands to buy. I only learned that from talking to a couple of bullion dealers. But anyway, the American Gold Buffalo sales, very attractive coin. It's essentially a reproduction of the American Buffalo nickel, which was in circulation, I believe, from 1913 to 1938, I believe. Yeah. And on the front is the Indian head, and on the back is a buffalo. And the first year they came out with this coin, they sold pretty decent amount, 323,000. It's not a big seller. It generally was selling about 200,000 a year until sales dropped off. So last year they sold 121,000. This year they are at 42,000. When it looks like if they continue at this pace, they won't sell more than last year. So American Gold Buffalo sales are somewhat on the decline as well, along with the American Gold Eagle. Let's see if there's anything else on the... Last night we looked at this. If you weren't around last night or you just want to see it again, I do want to show you the dollar value of American Gold sales at the U.S. Mint, American Gold Buffalo, American Gold Eagles. And you can see at one point in 2011, the U.S. Mint sold $1.8 billion worth of gold. And last year, or so far this year, $185 million through April. And last year they sold almost $500 million, $464 million worth. But in most instances, you can see they're selling more gold than silver, although 2011, when the price hit a high of $50, and there were decent silver sales, they almost sold as much in the dollar amount in silver as gold, which really means they have to sell a tremendous amount more of silver in physical amounts. But back then, in 2011, the gold-silver ratio had reached about 30 to 1, so it'd be very hard to replicate to get parity in dollar value when you have a gold-silver ratio of 89 to 1, although what's happening this year is close, because while silver sales are down, gold sales are almost non-existent, as we've just discussed. And even though the gold-silver ratio is 89 to 1, silver sales aren't as bad as the gold sales have gone down the past year. All right, I think we can move on from the American or U.S. Mint, and let's take a look at the second biggest seller of gold, which is the Canadian Mint. And the Canadian Mint actually outsold the U.S. Mint last year. And you could see that there, the 523,000 ounces of gold. Canadian Mint is historically a very good seller of gold. They've only recently, as we saw last night, in the last few years, started to sell a lot of silver. And same with the U.S. Mint. The U.S. Mint also, if you go back, let's go back, because the U.S. Mint from the other night, if we look at that chart, we see that they also were not selling a lot of silver. Let me just pull that up again here. There you can see it. There's the, I know it's Solid Gold Sunday with Smaulgld, but here's some silver just to show you that the U.S. Mint was not a big seller of silver until the financial crisis. And it's very similar with the Canadian Mint. And they've always, during those years, they were always selling a lot of gold. Let me just show you the Canadian Mint for those of you who don't remember from last night. Same thing. You can see not much silver sold, actually hardly any in the early part of the century. And then it topped up, you can see, just like the U.S. Mint from 2011 onwards, and then fell off. But now let's get back to gold. And you can see that the Canadian Mint, just like the U.S. Mint, have, well, let's look at the U.S. again. You can see they always sold a lot of gold. There's a period where the gold sales went down, but they were still pretty healthy. It's not like all of a sudden in 2008 there were big years. In fact, there were bigger years for gold sales when they first came out in 1986 and also 1998 and 1999. And the Canadian Mint, you can see, is also showing a significant amount of gold sales that have only dropped off just recently. So last year, the U.S. Mint only sold 188,000 American Gold Eagles, and if you add in the Buffaloes, they were around 200,000 ounces. But the Canadian Mint actually outsold them, and that's what I was showing here. 523,000 ounces in 2018, and the year before they sold 618,000. Now, those were down from 2015 and 2016, as you can see, where they nearly sold 1 million ounces. But the big years for the Canadian Mint, where they sold over 1 million ounces worth of gold, and this could be in the form of Canadian gold maple leafs. They also have a couple of other gold coins, gold products, but the main seller here is the Canadian gold maple leaf, which comes in not just the 1 ounce size, but a ½ ounce, a ¼ ounce, a 1/10 ounce like the US Mint. It even comes in this 20th ounce size, which is like less than half the size of a dime, and it looks like a fly speck. And there it is, 1.2 million ounces sold in 2009. And they put together a string of 3 years in a row from 2009 to 2011 of over 1 million ounces sold. 2013, 1 million ounces. But you can see it's been cut in half in 2018. Now, I don't have 2019 numbers. They haven't released their first quarter yet. The good thing about the Perth Mint and the US Mint is they do release monthly numbers, so you can kind of catch on what's going on. In fact, the US Mint updates them pretty much every few days, and therefore you could tell what's happened even in May, whereas the Perth Mint, you have to wait for the month to end. Canadian Mint, though, unlike the US Mint, the silver sales never approached the dollar sales of the Canadian Mint. As you can see, they also sold $1.9 billion worth of gold in 2011. And last year, they outsold the US Mint. They almost sold $1 billion worth of gold. They sold $900 million worth of gold last year. And the year before, they did crack $1 billion. So Canadian Mint's still a robust gold seller, but their sales have also been cut in half. Another big gold seller, as we mentioned, is the Perth Mint, and they also historically sell more gold than silver. Let's take a look. Here is what's happened with the Perth Mint past few years. Somewhat held up in 2017 and 18. Did not get cut in half the way the other mints did. Part of that is because I think they sell a lot to China and to Asia. They're in the Asia Pacific region, and they had a year 2015, 13 million ounces. 2018. No, these are the wrong numbers. These are the silver numbers. I apologize. I'll have to get you the gold numbers. On tomorrow's Smaulgld blog post, I will have the gold numbers. I inadvertently put the silver numbers there, so pay no mind to those. We're going to get out of that. And just check the website out tomorrow for the gold sales for the Perth Mint. Here are the gold sales, but they're not aggregated. These are the monthly sales. And again, though, you can see they have not really dropped off in recent times the way that the other mints have had. And in dollar amounts, let's take a look. You can see the same thing. Big dollar amounts sold at the Perth Mint. Just in a month, last month in April, they sold $36 million worth of gold. And if they keep up at that pace, they're going to sell $400 million worth of gold. They're a smaller mint than either the Canadian Mint or the US Mint. And finally, let's take a look at the Austrian Mint. The Austrian Mint essentially sells to Europe mostly. They make the same coin in silver as they do in gold. The Austrian silver Philharmonic. You got the big front of the building and the organ on one side. On the other side, you got all the instruments. Nice looking coin. And you can see in 2000, I don't have 2018 numbers. They haven't published them yet. But you can see the drop off as well at the Austrian Mint. And again, these charts will be on Smaulgld.com tomorrow. All right, that's it for the mints, I believe. We can take a look at the gold-silver ratio again. Now, an important thing to note about the gold-silver ratio. The gold-silver ratio is high, but I actually discount the gold-silver ratio almost altogether, because the gold-silver ratio can go higher if both metals go lower. To me, it doesn't mean much. I don't believe that gold and silver are that connected in that they're both viewed the same. They have different investment demand profiles, and therefore you really can't say that. I don't look at them as in relation to each other. When I look at gold and when I look at silver, I look at them independently and say, are they valued, overvalued, or undervalued based on the dollar, not based on each other. Because I don't think that they are close enough in demand profile that they should be viewed together. The only reason the gold-silver ratio is going higher is because gold has outperformed silver. Now, that's self-evident, but the reason gold has outperformed silver is there's more demand for it for jewelry, and there is also a higher investment demand for gold than there is for silver. And we'll talk about the central bank buying, and then also there is a very small 8 to 10% industrial component for gold. Now for silver, the bulk of it is industrial demand. And industry doesn't overpay for gold. They don't chase it. There's no premium on a commodity that is used in industry. Whereas jewelry, people are willing to pay a premium. Investment, people are willing to pay a premium. There's a scarcity element. And that's really why gold and silver, the gold-silver ratio has diverged. What people try to do is they try to sell silver on the basis that somehow it's cheap gold. Not really. It's a different metal. It has some investment demand, but the investment demand for silver only makes up 10-15% of overall demand, whereas in gold it makes up like 40-45%. The rest is jewelry and a little industry, whereas in silver the bulk of demand is in industry, and then the next demand is in jewelry, silverware, and the lowest demand is actually for investment demand. All right, let's move on from the gold-silver ratio, the unsustainable gold-silver ratio, and let's take a look at the COMEX warehouses. Last night we looked at the COMEX warehouses, and we looked at how much silver was in the different warehouses, and we saw there's plenty of silver, 300 million ounces plus in all the COMEX silver warehouses. The gold warehouses, the COMEX approved gold warehouses, have about 8.9 million ounces, or about 260 tons. Let's look at before we do the breakdown, probably better rather than adding it up, it's probably better to just take the total tonnage. 8.36 million ounces. That's all the gold when you add up all the different COMEX approved vaults. 8.36 million ounces. And if you go back to 2009 and you all the way up to 2019, you see there were times like in late 2016, early 2017, there were almost 13 million ounces. And there were some periods of time between 2010 and 2013, maybe there was 11 million ounces. And then around 2013 or 14, there were 7 or 8 million ounces. So we're kind of on the low end in the amount that is in the COMEX depositories, but it's not shockingly low. There is, as I mentioned, if you take 8.36 million ounces and put it into tons, it's about 260 tons. Put that in the context, that's about what Russia adds to its central bank reserves every year. So it's a lot, but it's not a staggering amount of gold that's in these COMEX warehouses. What is somewhat staggering is the very limited amount that is technically registered for sale, registered stocks. There's only 210,000 ounces. That is the silver that would be delivered upon demand on closing out of a contract. And this is the 100-ounce bars, the good delivery bars. This isn't all the gold that's in all the warehouses. It's just all the gold that's in that good delivery 995 pureness. Now let's take a look at the breakdown of those COMEX vaults. We'll see that BRINK'S has, and this isn't all the gold that BRINK'S has. This is the gold that they have available for trading on COMEX. And they used to have 1.3 million ounces at the beginning of 2017, and they've hacked down the amount of gold that they have. And they only have, even though they have about 100 and about 210,000 ounces in their depository. Only 22,000 of those are registered for sale. And you'll see that's very similar trend in all of the different depositories. So the Delaware depository doesn't have much, it has 103,000 ounces, but only 13,000 of those ounces, 13,000 ounces are registered for sale. The very small amounts registered, not large amounts in general, but very small amounts that are registered. Scotiabank, which is exiting this business, and you can see, hence the decline in what they're holding. They used to hold 4.5 million ounces back in 2011, and today they hold under 500,000 ounces, 337,000 ounces, and only 31,000 of those ounces are registered for sale. And then there's JP Morgan, and JP Morgan is the second largest gold depository hoard, and they are at 1.2 million ounces, and only 105,000 of those ounces are registered. The big one for gold COMEX is HSBC. HSBC runs the GLD, whereas JP Morgan runs the SLV. Those are both the two largest gold and silver ETFs respectively. So HSBC has a staggering 5.6 million ounces. They've got the bulk of, there's 8.36 million ounces in total, and they've got 5.6 million of those ounces. That's even more than half. Now JP Morgan has 150 million of the 300 million ounces of silver approximately on the COMEX warehouse side, but here you see HSBC's really got the bulk of it. And even though they have 5.6 million ounces in the vault, only 36,000 of those ounces are registered for sale. So that's why you're going to get some of these stories where people are saying the COMEX is going to default, the registered stocks are low. And indeed, if you look at it, it is low. That the registered stocks are represented by that darker green shape, and you can see they're very, very close to the lighter green, meaning the gap isn't very much, and therefore it's been lower before. It's been almost non-existent in 2016. You can see in through 2016, you can't see much of a difference between the two. But I would get worried if the eligible stocks weren't there. But eligible stocks can be converted into registered stocks very quickly and very easily. If people are just holding on to their gold, there's no reason to have it registered. You just buy it in the form, throw it into the vault, and it stays there. And if you have no intention of selling it, if the price were to spike, I would imagine that a lot of the eligible stocks might move over into the registered column. But HSBC is the big one there. They're the ones that are holding the most gold. Let's take a look now what that means for when you talk about the owners per ounce. And this is where people get all freaked out with the owners per ounce. We looked at this last night for silver. We'll take a look at it now for gold. Top segment of the chart shows the gold price in gold, in the gold line. The second portion of the chart shows the open interest, which is the amount of contracts outstanding. Each contract has 100 ounces per contract, and there are 52 million ounces of gold that are sloshing around as part of the contracts that are outstanding. That's a lot. That's like 1,800 tons. I'm just doing the calculation in my head. That's a lot of gold being traded, but there's not that much gold in the COMEX warehouses. In fact, the registered stocks are de minimis. That's the third box down. You can see how low it is. It's almost as low as it was in 2016. That's the blue line going across, and it says registered stocks, 213,000. And then what this chart does by Nick Laird at Gold Charts R Us, he then calculates the number of contracts outstanding and what they represent in total ounces and divides it by the amount of registered gold is available to settle those contracts. And you see he does what's called an owners per ounce, and it is at 244. You say, well, that's pretty high. That doesn't give you much confidence that the gold is there to be delivered. And you can see back in 2016, it was over 500 to 1. And then you could see in 2017, it went down to, 10, 15 to 1. But the real number to look at is not that number. It's the owners per ounce total when you take into account all the gold that's there and available, that's in registered, that's in eligible form, that can be registered. Now, you can't take gold eagles, gold Krugerrands. They cannot be used to settle the COMEX contracts. Even though they're good, they're not considered good delivery. They would have to be melted down and cast into those particular COMEX deliverable bars, the 100-ounce 995 bars. But when you look at the chart and you take the contract value, the 52 million ounces, and then you realize, wow, there's 8.5 million ounces almost in eligible form, then your owners per ounce is pretty much near the historic of the last few years of about 6 to 1, 6.2 to 1. It's never been above 7. It got close in 2016. So, yes, fractional reserve, but it's not really because the bulk of the traders, unlike fractional reserve banking, where you deposit the money in the bank, or you lend the bank money, you don't really deposit it, you do have an expectation to take that money out. I mean, it's not like you're leaving it there because you don't want it. Whereas when traders trade gold, they don't really want the gold. They want the fiat profit. So you're actually safer with fractional reserve trading than you are in a bank. I think your bank is more precarious in that if everyone wanted their cash, which why wouldn't they if there was an issue, it wouldn't be there. There's definitely a far greater cash shortage than there, and the cash is unbanked, but there's a far greater cash shortage than there is a shortage of eligible, not registered, but eligible gold at the COMEX, both for silver and for gold. All right, and the last thing I want to look at with you guys is the Dow gold ratio. I want to look at the ETFs and then talk about the central banks. And tomorrow, I believe the Central Bank of Russia will announce its gold, and maybe we'll cover a bit of that tomorrow. I don't have the numbers yet. They haven't released them. But let's take a look at the Dow gold ratio. That's basically you divide the price of the Dow by the price of gold. And it's pretty elevated right now. And generally what people say, people who follow gold, is they always say, when do you sell your gold? And a lot of long-time gold people will tell you when it gets into single digits. Because they're saying then at that point, gold is overvalued relative to the Dow. But we haven't really reached that. Even in 2016, we had a bit of the Brexit spikes. The Dow gold ratio was around 13. And that's because you had a drop also. The Dow hadn't really done much. This was in the 2016 year. Going up to the election of 2016, Trump versus Clinton, stock market wasn't moving higher. But you can see in the gold line, 2016 the gold price was going up. And the stock market was moving up, but not significantly. And that's why the Dow gold ratio was in the 13 range. But then it rose. You can see it goes inverse. In 2018, the Dow gold ratio reached over 22 as a result of the stock market somewhat peaking and also the gold market, going down in 2018 below 1200. So the Dow gold ratio went higher. And then in the end of 2018, remember that December crash, so to speak, in the Dow. You can see the black line goes down. Gold moved up, at least from November, December into January and February. And then the Dow gold ratio went down to about 17. But since then, gold has kind of sputtered out. And then the Dow had a bit of a rally in early 2019. And the Dow gold ratio went up. And you can see it stands at about 20. ETFs. The ETFs generally follow the price. Unlike the silver, where they just keep adding more silver into the ETFs, you could see the price goes up from 2009 to 2011, 12, 13, and then down. You can see the outflows, and then up again in 2016, and then a bit of a leveling out. And the last few months it's gone down, and you can see the outflows there. This chart shows the SPDR, which is the GLD, which is the biggest block in there. That's the yellow, and then you've got Sprott is in there somewhere, iShares. Anyway, you can see this chart tomorrow on Smaulgld as well. But let me show you the other chart. We also looked at it silver last night, which are the total number of ounces. You add ETFs, you add in the COMEX vaults, you add in things like gold money and bullion vault and Perth mint deposit, just all the gold that's held, not just COMEX style gold and not just ETFs, that's held in custodial arrangements. And you have 89.867 million ounces locked into these types of storages. And that reflects about 2,800 tons of gold. Now, what's 2,800 tons of gold? That's a lot of gold. I'll show you what I mean. If there's 2,800 tons held in these types of arrangements, and GLD itself has got about 715 tons in the GLD, well, that's more than India's central bank has. That's more than the Bank of the Netherlands has. It's about as much as Japan has in total in the Bank of Japan. And all the gold that's in these storage facilities, as we mentioned, is about 2,800 tons. Well, that's more than China. That's more than Russia. That's more than France. That's more than Italy. That's even more than what the IMF has. It's like the second or third largest hoard behind Germany central bank, and the U.S. is gold held by the Treasury at Fort Knox, West Point, and a few other locations. So plenty of gold. That's the thing about gold, is it is definitely hoarded and stored. Before we get into the questions and comments, if you want to ask a question, just type in SMAULGLD and I'll get to your comment. Just want to mention gold premiums on American Gold Eagles. Not really much to write home about. They're not that high, not that low. Again, you can see this chart tomorrow on Smaulgld.com. All right, well, let's see what you guys are saying. And then tomorrow we'll get back to the regular program. We've got a lot of news stories to cover. Lots going on with Trump, Mueller, Barr, Comey, and so on. And we'll fill you in on that. And also some crypto stories, some more gold and silver stories. And we should have the Russian numbers tomorrow, so please make sure you tune in tomorrow. Tune in every day. We do this every night around this time. Some nights I miss if I've got other obligations, but I try to keep this going every night around 7 o'clock Eastern Standard Time. And let's see what you guys are saying. And there is the fundraising page, the ever-important fundraising page, where you can donate to Smaulgld via Bitcoin, Litecoin, Patreon, PayPal. You can send checks or other items of value, gold, silver, to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire, 03820. And also, I don't have on here, but Subscribestar is also, it's a Patreon alternative where you can donate a small amount each month. And we have over there Smaulgld Mug Stacker Clubs. That's subscribestar.com/Smaulgld. And Patreon is patreon.com/Smaulgld, or you go to PayPal, paypal.me/Smaulgld. Any and all contributions are indeed highly appreciated. And also, if you are a mug stacker, and remember, some of you are mug stackers, you claim to be mug stackers, but you only have one mug, and you really can't stack a mug. So, if you're interested in the second mug, Smaulgld Classic and Super Classic mugs shipped directly from Smaulgld headquarters. Go to Smaulgld.com. You can order them there. I package those up directly. All the other mugs, the beer steins, the frosted beer mugs, the pet bowls, the shot glasses, all of those other Smaulgld products are from the Zazzle site. All the links for those are also on the Smaulgld website and below this BitChute and below this YouTube. So please check those out and help support Smaulgld.com. All right, let's see what comments we have. We've got Phil McCain, excellent, and Ann, and Pablo. Tom Manley, haven't seen him in a while. Good evening. Pablo asks, why do some coins have different face values, sometimes 4x? I don't know what you mean by that. What else? DW is here. Johnny on the spot. Did you guys buy Bitcoin on the bit? Hey, this is Solid Gold Sunday. No Bitcoin tonight. I like the Buffalo. It's 999 gold, says DW. That's right. All right. I'm waiting for the banks to drive gold prices down even more, says Tom. Okay. Looking for comments. Don't see any. Got a lot of comments, but none directed towards me. Shocking chart from Chris Drain today, says Jack. Global trade IMF chart. It's looking like we've hit 2008 lows with no effect on stock market. I'm bracing myself for chaos. Not quite sure. Bitcoin Litecoin ratio is similar, says Pablo. Yeah, it's a little less than 100 to 1. And they advertise it too. One is digital gold, the other is digital silver. It's interesting that, yeah. It's the chart that worries me, not Chris. I don't know. What is, I don't understand. Shocking chart from Quiz Dwayne today. Global trade IMF chart is looking like we've hit 2008 lows with no effect on the stock market. I'm bracing myself for chaos. Here's the problem. A lot of times charts do tell a story. Data tells a story. But oftentimes it's the spin that people put on stories. I mean, you've listened to Chris Drain for how many years telling you why all this means silver set to skyrocket. And if it doesn't go higher, you have to question, well, maybe that data is improperly analyzed or analyzed with a view towards a narrative. I mean, people do that all the time. If you're looking for information that's going to tell you silver set to skyrocket, you're going to find a mine that closed, and from that you're going to extrapolate that there's a silver shortage. Chris didn't do that, but I'm just saying that's what people do. They will find something that will give them hope that their narrative is true. This is going to happen. You see with the Bitcoin pumpers, it's going to take over the world. It's going to be this. It's going to be the world reserve currency. They read into stuff, and they tell you, did you see this Basel III? And they'll tell you that that's going to change everything. And I'm not going to go into why that didn't change everything. The point is, they mention these things. They get you all excited about whatever particular chart is. Mike Baloney, whoever it is, they'll show you something, and they'll tell you. Like, for example, I've seen that one where they talk about the amount of gold that's registered at the COMEX is at all-time lows. You hear that. You'll hear the other one we talked about last night, that the commercials are long for the first time in history since 1987. Yeah, true, but it doesn't mean anything. So a lot of these pieces of information, they're designed, some of them are clickbait, some of them are just cherry-picked and they don't mean anything. It's not like, and that's what they say, no one's talking about this. So a lot of what these channels do is they try to make it look like they're giving you something unique that the world doesn't know. And that only you know, and therefore you should buy gold or silver because you have this knowledge. Well, look how that's worked out for the last 8 or 9 years. I've heard all these stories. COMEX default, gold back yuan, historic COMEX traders going long, JP Morgan stacking silver. Yeah, all these stories. Most of them are just made up. And if they're not made up, they're totally true, but they don't mean anything. So you really have to remember, when you look at these channels, the only thing you really can't trust me on is when I talk about mugs, because I'm selling mugs, so you got to really check the sources. But if somebody is selling gold, or somebody is selling silver, or somebody is selling newsletters, you have to double check their information. And even if the information is true, it doesn't mean that there's some logical conclusion based on the information that's presented. Sometimes people present you with information and they're like, see, there you go, that means collapse. And then maybe it doesn't. It doesn't stand on its own. Just like central banks are buying gold. That is all I need to know. And what we do on this channel is we say, well, which central banks, how much are they buying, how much it is as a percentage of the total amount of gold, where are they getting the gold from, Do they produce gold? Are they mining companies? How's their currency doing? But that's not what they do. They just tell you, and then I see it online. Oh yeah, then why are central banks buying the most gold ever? And you say, okay, so that's a fact. They bought the most gold since 1967. 80% of it's the Russian central bank, and it's 8 to 10% of overall annual gold demand, not counting all the other gold that's out there. So what's the big deal? If that really was a big deal that happened last year, then why didn't the gold price go higher? Well, you'll see. They know what's coming. Yeah, I'm sorry. I hear this stuff all the time, and it's disheartening how people fall for this stuff. They hear something and they're off to the races. Look at this chart. This guy showed a chart. This guy has this data. This mine closed down. There's going to be a silver shortage, a gold shortage. Game over, game changer. I think people, you should be tired of this. When people present stuff to you for 10 years about silver set to skyrocket and it goes down. Well, that's because the central banks, it's the Achilles heel of the babble. The price has gone down. There's reasons for prices to go down. There's reasons for prices to go up. And somehow the markets don't interpret whatever piece of data they're throwing under your nose and telling you, this is it. This is the big one. This chart shows us everything we need to know. No, it shows you everything you need to know maybe to make a purchase. All right, batten down the hatches. What else? Yeah, the chart worries me. All right, what else? Yeah, we're reset and all this stuff. Who says there's going to be a reset? What? That's another one. And it's going to involve gold or silver. Why? Well, it's going to involve Bitcoin. Why? Well, who makes up this stuff? Why do people believe that because someone said it that sells a newsletter? Well, fiat currencies, they only last 45 years and we're well overdue for one, so they're... No, that's just somebody asserting something. And then other people repeat it, and then you think it's a fact, and it's not. Yeah, quantum computing, and let's see, COMEX is empty. No, COMEX is not empty. All right. What else have we got? Who's talking about Bitcoin? We're not talking about Bitcoin. This is gold here. We're talking about gold. Gold. All right. Looks like you guys are having a good convo amongst yourselves. Then I'm going to let you go. I should just leave open the chat line here. Yeah. So Pablo says, I'm here to see the greatest wealth transfer, and it's going to be mugs. That's right. If you think about all the nonsense that they say, just substitute pork bellies or copper for the things that they say, and you realize how ridiculous it is when they start talking about silver. All right. Trump backing gold with dollar. No, he's not going to do that. All right, guys. I want to thank you for joining me. I'm going to give you the Bernie 10-second countdown. And if we don't have any further comments or questions, we'll say goodnight and we'll see you tomorrow. Tomorrow night is Monday. And you know what Monday is? It's Monday night mugging for life with Smaulgld. Yeah. All right, Bernie, have at it. All right, so I'm going to give you the countdown. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Have a good night, everybody. All right, everyone. Have a good night, and thanks, Bernie.